There's a company out there with nearly $1 trillion in its pocket, and it's shaping everything from your retirement savings to the roads you drive on. But let's be honest, most of us have no idea how it really works. So today, we're going to crack the code on that company, Apollo Global Management, and we're going to do it in just the next few minutes.
So, this right here, this is basically the source code. It's Apollo's latest filing with the government. We're talking 162 pages of legal jargon, super complex tables, and financial footnotes. It's a lot. And frankly, it's designed for Wall Street analysts, not for the rest of us.
So, yeah, we did the hard work for you. We waded through all 162 pages, we listened to their investor calls, and we pulled out the key signals from all that noise. And our goal is simple: to give you a clear, quick breakdown of what Apollo is, how it makes its money, and maybe most importantly, why you should probably care.
Okay, so what's the secret to actually understanding Apollo? Well, you have to realize it's not really one company, it's two. Just think of it like a machine with two powerful interconnected engines. Once you see that, everything else just kind of clicks into place.
And here they are. On one side, you've got the asset manager. This is the part of Apollo most people think of, managing these giant pools of money for huge clients like pension funds and earning fees for doing it. Then, on the other side, you have the retirement services business. This part operates under the brand name Athene, and it's all about selling insurance and retirement products directly to people like you and me. All right, let's pop the hood on that first engine, asset management. This is the part of the business that's out there investing in everything, from corporate loans to buying whole companies, all to help big institutions grow their cash. And the amount of money they're managing is just staggering. Their total assets under management, or AUM, just hit a record of $840 billion. But here's the part that might surprise you. While Apollo is famous for its private equity deals, just look at the breakdown. The huge majority, $690 billion of it, is actually in credit. That is a really key piece of the puzzle. And that AUM, the total value of all the money they manage, think of it as the raw fuel for this engine. The bigger that number gets, the more fees they can rake in. It's really that simple. And that brings us to their key profit metric for this engine, fee-related earnings, or FRE. This is the money they make just for managing all that capital. It's stable, it's predictable, and it just hit a record $627 million in a single quarter. This is like the steady, reliable hum of that first engine. But there's a second, much more explosive part to this engine: performance fees. Take a look at the returns on some of their big private equity funds. I mean, you see these insane highs, right? Like Fund V hitting a 44% net return. But then you see these other funds down at 9%. It's a total boom or bust game. Incredibly powerful, but also incredibly unpredictable. And get this, Apollo was super clear about this themselves. This is a direct quote from their filing. They're basically warning investors, hey, what we did in the past is no guarantee for the future, and our returns can swing wildly. That is some crucial context to remember. Okay, let's switch gears to that second engine, the retirement services business, Athene. So if the first engine is all about investing money for huge institutions, this one is all about gathering money, and lots of it from everyday savers. Athene's main business is selling annuities. Now, these are basically contracts where a person pays a chunk of money now, and in return, Athene promises to pay them a steady income stream when they retire. And the scale here is immense. In just the last 3 months, they took in $21 billion in new capital this way. So how does Athene turn all that cash into profit? Well, it's all about something they call spread-related earnings, or SRE. They take the money they collect, they invest it, and they aim to earn a higher return than what they've promised to pay out to their customers. That gap, that spread, is their profit. And it's a massive one, $821 million in just the last quarter. So let's recap. We have these two massive engines. One is a capital manager that needs tons of money to invest, and the other is a retirement business that is incredible at gathering huge amounts of it. The real magic, the crucial point, is how they work together, and the CEO has a name for it: the flywheel. And this right here illustrates the whole model perfectly. Okay, step 1, Athene gathers billions in long-term stable capital from selling annuities. Step 2, that capital becomes the fuel for the asset management engine. Step 3, now the asset manager doesn't just go buy stocks and bonds, it originates complex private investments, like financing a new power plant. And then step 4, Those unique investments generate the returns needed to pay back the annuity holders and, of course, produce huge profits for both sides of the business. It's a brilliant self-reinforcing loop.
So this powerful flywheel has made Apollo an absolute giant in private markets. But now it's looking for new, even bigger sources of fuel to keep that flywheel spinning faster. And it has its sights set on one of the largest pools of money on the entire planet.
$12 trillion. That's the estimated size of the U.S. 401k and retirement market. This is your money, the money you and millions of other people are saving for retirement. Right now, it's mostly sitting in public stocks and bonds. But Apollo sees a massive opportunity here to bring its world of private investments directly into your retirement account. And here's how CEO Mark Rowan frames it. He basically argues that by giving everyday retirement savers access to the kinds of private investments that were, until now, only for the wealthiest institutions, Apollo can actually help solve the retirement crisis by generating better returns. Okay, so we've decoded the two engines, we've seen how the flywheel works. But what does this all actually mean for you? Why does understanding a company like Apollo even matter? All right, let's put it all together. Apollo is basically this incredible financial machine. It uses its retirement business to gather massive amounts of capital and its asset manager to deploy it. This flywheel makes them a dominant force in the private markets that are literally building our physical world. And their next big move? To bring those very same investments directly into your 401k. So, all of this leaves us with one really big question. You see, the old lines between the public stock market and the private financial world, they're disappearing. And as these incredibly powerful firms like Apollo move right to the center of our economy, shaping both our infrastructure and our retirement, you just have to ask, in this new landscape, who really wins?